Today's Wednesday, May 18th. My name is John Paul. I am the creator of DayTradeToWin as well as Power Price Action. Those of you who don't know me, or those of you who have been following me, know that I really take pride in the way that I trade without the use of indicators. So this webinar, and I don't do a lot of them. I did one with NinjaTrader not too long ago, but I don't do a lot of webinars. But when I do, I try to really come across with as much information as possible. I want to teach you a little bit about how I trade using price, how I interpret the price, as well as showing a little bit about the power price action method that has been very successful since launching in January of this year. So if you have any questions, please don't hesitate to ask me as we go along. I like to keep these webinars as informal as possible. You're going to see some charts. I want to actually teach you how to trade the news. I have here the ABC pattern. I'm not sure if I'm going to be able to get to the ABC pattern today, but I will. Next webinar I do, I will explain to you what the ABC pattern is all about, but I do want to teach you about how to trade the news and how I interpret it. The market's been very slow. The E-mini's been very slow. So if you start looking at currencies, it works the same exact way. Price action is price action, regardless if you look at it on an E-mini or a currency or Forex or whatever. This webinar is actually hosted by one of my brokers, Optimus Trading Group, Matt Zimberg. I've been with Matt a very long time, and if you aren't already with Matt as a futures broker, please contact him and find out the rates that he gives. He gives phenomenal service and phenomenal rates. Alright, so I do endorse Optimus Trading Group as a broker. So to start off here, with each webinar, we have to look at the risks inherent, I should say, with each trade, with trading and futures trading and forex trading, I should say, there are risks. So please do not trade with funds you cannot afford to lose. Obviously, there's risk with everything in life, especially when it comes to trading, forex trading, futures trading, stock trading. Please don't trade with funds you cannot afford to lose. It's very important. All right. Name of the broker, Jay, is Optimus Trading Group. Matt Zimberg is the broker and proprietor. Okay, Jay? Alright, so today's webinar, just to give a little bit of a recap, price action trading, what it means to follow the price when trading. Indicators versus price action. I have a little demonstration of what it means to trade indicators and what it means to trade the actual price. I also want to show you how we think as traders and how we all make the same mistakes. Believe it or not, the trading mind is a one-track thing. We all do the same mistakes, and believe it or not, it's not so much what you may be thinking. It's more along the lines of where we put our stops and how we think of trading. I want to show you a little bit about that. And how the pros trade. I want to follow them. As usual, big money is what moves the market, and therefore it's not really what we think that's going to occur that does occur. It's what money is infused into the market that pushes it. And I want to trade the news right. So at the end of the webinar, I have a few slides on how I trade the news. So stick around till the end of the webinar. I have a lot of information to go over, but I think I'm able to cover it within an hour. And what you expect when trading the news doesn't always happen. So I am going to go over that with you as well. Okay, and if you have any audio connection trouble, we have a lot of people in the room here. George, I would suggest possibly maybe exiting the room and re-entering the room if the audio is breaking up at all. All right, George? All right, so how we think as traders, how not to make the same mistakes. Everything you ever need is being played out as you see it on the chart. So, as an example, I don't concentrate on market profile. I don't follow market profile. I don't follow candlestick interpretations. I just follow the price that is being displayed on the chart. So, if you're wondering how I trade the price, it's not market profile. I don't use Fibonacci's. I don't use Bollinger Bands. I don't use any of that stuff. Really, it's just the way the market moves with the either price bars, and I prefer candlesticks, how the actual price moves on the chart. So if you're thinking, well, what does it mean to trade price? Just look at a chart and you'll see exactly when the price goes up, the price goes down, and it's all being played out in front of you very clearly. Now, I always have a blueprint when I trade. I want to know exactly, and I use exact numbers for all of my trades. Not looks like, could be, roundabout. It's exact entries and figures. So my style of trading is very objective. It's very black and white. And I think that's how trading really should be. I don't think we should say, for instance, right around here we're going to go long. At what price? What's the exact entry? What's my exact stop? And what's my exact profit target? So this is how I trade, and everything that I show and teach is with exact entries. It's not roundabout, looks like, or could be. I use exact figures with everything I do. Trading price action is how successful traders do it. Nothing really else matters. And I'll give you an example. If you ever pay a visit to the New York Stock Exchange or the Chicago Mercantile Exchange or the NYMEX or any of those exchanges, and you look at how they're trading, do you ever consider how many indicators they're using or how many monitors looking at or any of that stuff? Because I have to say that the traders on the floor, they look at only two things. They look at the price on the board and they look at the time. And so I've never heard any of my floor brokers say, where's that 50-day moving average? Hey Larry, what are we doing with that stochastic or MACD? They really could care less. When they're trading, they look at the board, they look at the price, they look at the time, they look at where we are in a day, and they trade. And so if they're not using any of this outside stimulation, then I don't think we need it. I think it just confuses us, really. And I've been saying this for a very long time, since I started Day Trade to Win. Price action is the only way to be consistently profitable when trading. Now, what is the price telling you? If the price is telling you that the market's going up, typically traders don't look at what's happening. They're always looking to do the opposite. They're saying, where's the top? Where am I going to go short if the market's going up? I want you to instead take a look at what the market's telling you. If it's going up, take a hint and go long. Okay? Follow what the chart and the price is telling you. It's very important. So, have you noticed the market lately? I'm going to show you today's chart and yesterday's chart. How are your indicators doing? Most traders use indicators. Stochastics, MACD, moving averages, bands, Keltner, Bollinger, all that stuff. How have your indicators been doing lately? The market has been chop lately, and actually it's been very slow. I haven't seen the indexes this slow in a very long time. It doesn't mean that we can't trade them, but we do have to understand that the market is slow, and hence I'm following the current market conditions, I'm following price, I'm following what is really happening to trade. Okay? We can't trade the same way, obviously, if the market is slow as it is when it's trading normally or when it's trading volatilely, very volatile. So, SJ, send me an email, SJ. Alright, SJ, send me an email and I'll be happy to send it to you. Alright? Have a good night in Melbourne, Australia. The market has been chop lately, so just take care to realize the market if it's fast, slow, and so forth. Recent market activity has been erratic. Okay, so it's great when we have trends every day, but honestly, trends don't happen as often as we would like. Okay, trends occur maybe 10-15% of the year, so you can't count on trends occurring all the time. Okay, how can we trade this? Really, how can we trade this up and down? Strong moves up and down, and it stalls, and then it ranges, and then it makes a burst, and it stalls out. How can we trade this? Well, let me show you an example of today. This is today's chart, and typically when I do webinars and when I do presentations, I don't pick and choose the days. I actually show you what's happening in the now, which is very important. So this is today's chart, and you see as we follow what happens here in price, we see it go up, we see it stall out, we see it go up again, we see it go down in between, go down again. So this is really what I'm looking at when I trade the price. But if you have indicators that are cluttering up your chart, this is really what it comes out to be. And there's the last up arrow there. This is really what it comes out to be. I have here the 2 moving averages and an RSI. Doesn't matter if it's stochastic or MACD. You're going to get the same results on a consistent basis. Price goes up, the RSI is telling you go short, then the price goes short, RSI is telling you go long, moving averages are telling you to go long, price goes down, or the RSI goes down, and price is telling you still let's go continue to go long. All these things really confuse you. They don't help you as a trader. You never know what to follow. Are you going to follow the RSI? You're going to follow the stochastic? You're going to follow the MACD? You're going to follow the moving averages, the Bollinger Bands, the Kelvin channel? What are you going to follow? What takes precedence? What trades? What indicator trumps other indicators? What time frames? All these things are thrown at you, and as a trader you can definitely optimize anything to look great, but moving forward, unless you take the current market conditions into play, it's never going to work. Okay? Here we have yesterday. Okay, and yesterday I have here the same moving averages. I didn't change anything. And you see here price is going up, and it's starting to tell you to go short here with the RSI, and then the moving average tells you okay, it crossed. Then the moving averages are telling you to go long, and the RSI is starting to cross. So what do you follow? It's starting to cross up again, and if you look at this chart here, you can see that just like today, this is yesterday, just like happened today, yesterday's chart is no different. When you try to interpret the indicators, it's really more difficult to find out what to follow, if you're following the right one, if the parameters on the indicators are right. This is what I try to bring to light when I talk to traders and when I show them that there's a different way. So now I'm going to show you what the power price action trades were for today. Today's May 18th, and we had a long entry there based on price action, and an exact blueprint to follow. You see I have an exact price to enter. It's 1327.50 or nothing. Alright? Then I have a long entry here again at 1332.25. This is the E-mini S&P. Again, I'm using exact numbers to enter into the market, okay? Which I think it's important. There are no indicators. This is an actual method that I teach, and it's called the power price action. Here's another long entry at 1337.25. Again, an exact number to reference and to go long at. And then we have another long entry here at 1338.25. So each step of the way, There's a reason why I'm going long. Price action is confirming it. I'm entering with exact prices. I have exact stops. I have exact profit targets. And so if you're not trading like this and you're trading by the hip or on the whim, please consider what you're doing, because mistakes are costly. And unless you have an exact reason for each one of the trades you take and you don't keep a log and all that good stuff, then I'm sorry to say that you're not going to be able to be consistent when trading. So these are the power price action trades that occurred today, May 18th. Now, what occurs in price? Well, I mentioned to you that I want to watch how it moves and flows. But price action really is more than just watching the price. You have to wait, you have to be ready. We can't be blind. And we are going to ignore all other influences, okay? If you have, for example, the news on while you trade, either it be CNBC, whether it be Fox Business, they're telling you one thing and you're influenced by what's happening. So do yourself a favor and ignore all other influences and trade just what is on the chart. Now, indicators that try to catch moves will always be behind. When price makes a move, the bar candle closes and posts. The indicator will always wait for the close of the move to calculate what occurred and then plot that information. But by that time, the move is over and price is now moving into another direction. So really, to clarify this, I put together a nice little slide that I want to show you. I have a timeline here which indicates each step of how price and how indicators interact. Okay? So in number one here, price moves up or down. So price makes a move. The indicator that you're following really does nothing while the move is occurring. It's waiting. And then we have here in number two, the price bar closes and the move is over. And only after the move is over, whether it went up or whether it went down, that indicator that you're following is now calculating what price did. What just occurred is that the move up or down is finished, and now you're trading off of information that has already happened. So you're late. And now number three here, price is now in a new move, a new bar. But yet, while it's creating a new move, whether it's continuing up or reversing, your indicator is doing nothing because it's still plotted based on what happened here in number two. Alright? And only after the third here, the candle closes, indicator plots a line, a dot, a chart, which is based on what occurred in number two. And now we go on again, over and over again. The price bar closes, the move is over, and nothing is happening. So what I'm trying to do is capture how price is trading, instead of letting an indicator tell me what to do and waiting for the move to be over and then enter. So I don't want to be late. I want to be on the forefront. So how we think as traders, how we all think as traders, believe it or not, we all think the same way. I'm trying to break that mold where we don't all trade the same way. We trade a little bit differently. Okay? Eric, yes, it is being recorded. I'll have the recording up on my blog when it's over. Sure. All right. Jerry, I'm going to go over some of the price action methods towards the end. Absolutely, okay? So how we trade and how we think, we all make the same mistakes, and I'll show you why. Have you ever noticed where you place your stops? Okay? Have you showed have you noticed where you place your stops? Think about how you trade and where you put your stops, because believe it or not, when the market is moving up or down, we all place our stops at the same place. And if we do place our stops as everyone else, the same place, this becomes a huge problem, because on the board we can see where all those stops are and we can take them out. So let's try not to place our stops where everybody else does. And the majority of traders place stops and targets in similar places. They place it at Fibonacci levels, they place it at the high and low of the day, or the high and low of the prior day. This is where most traders place their stops. But more importantly, besides this, have you ever placed or entered a trade and looked at where you place your stop? If it's not at a Fibonacci level and it's not at a high or low of the day, I would say to you that probably 90% of the time, most traders place a stop at a nice sounding whole number. Okay? So that means that when you place a trade, let's say you're going short at 1340, for example, your stop, or typically where everybody wants to put their stops, at a nice whole round number, that 1350 area is just going to be flooded with stops. And so try not to place your stops at those nice sounding round whole numbers, because that's exactly where the price is going to go and reverse based on everybody having their stops there, based on running the stops, based at being a nice sounding whole roll number. You're always going to see price come off of or reverse after taking that out. So don't place them where it sounds good, place them where it's realistic. Okay, that's much more important. Let's think about how the markets work for a second, all right? It doesn't really matter here, these numbers here on the side. Could be a stock, could be a futures contract, could be currencies, Forex. But think about instead here the actual price as it comes up, and you're long this market and you're trying to take some profit. Look how, if you have a profit target of 60, how it just misses 60. Okay? And so you say to yourself, all right, no big deal, I'm going to hold the trade. And then a second candle here does the same exact thing. Tries or attempts to go to 60 and fails. But yet your profit target is 60, or maybe 61 or 62. And a third candle here comes around and says, hey, I'm going for 60 and I failed. Second, third time. Well, I have to say that unless you're not reading what the price is telling you, and you have your profit target at 60, it's best to get out of this trade, because on the fourth candle it proves to you again that it's trying to go higher and failing. And it's failing not because you want it to. It's failing because you have all this proof. It tried once, tried twice, tried 3 times, tried 4 times, and you're holding out to this trade. Something's wrong. Read what is happening. You have proof, you have confirmation. Front run a trade. And when I say front run a trade, I mean lower your profit objective by a tick or 2 in order to guarantee a fill. And that's what front running a trade is all about. So when you front run a trade, if only 100 contracts are traded with 500 waiting to be filled, you are out of luck. You are absolutely out of luck. And so front running a trade guarantees that you're going to get filled when everybody else is waiting to be filled on that 60 number. So front run it, just go in front of it by 1 or 2 ticks to guarantee yourself a fill. Alright? Remember, price has to go beyond that actual price to guarantee a fill. If it touches it and there's, let's say, 500 people waiting to get filled at 60, and it only 10 get filled, that price traded at that price, but yet you are out of luck. Okay? It's good for scalping, but also for normal trading. All right? Anybody have any questions on how and why we front run a trade? We have proof of price not going but failing, more importantly. It's being described and it's being shown here. And so I want you to read it as it's occurring, and maybe not by one candle, but by multiple candles, it's beginning to tell you something very clear. It's telling you that price is unable to go higher. You should get out of that trade. All right? So how we think as traders. Let's follow the price a little bit here. Each time price goes up, are you going to sell it? Are you thinking, probably, let's sell it? So if the price is telling you, it's going up, I want you guys to follow it. All right? You got it, guys. No problem. Sorry about that. The price is going up. Each step as it's occurring, don't look to sell it. Look to follow it. Right? You have proof that it's going higher. Don't want to try to take the opposite. Follow the price as it's going higher. Okay? So what are you going to do when this happens? Well, will you buy the market if it's high or you think it's too late? Well, traders normally don't enter the market because they think it's too high. How many times have we not entered a trade because we say, oh, it's too high, right? Plenty of times. Price is still moving higher and you think, wow, I should have entered. But all you do is you think you should have entered, and you see the market move higher, and that gut feeling screams that you missed the move, right? But you're doing nothing. You're just on the sidelines. And then finally, you build up the courage, and you say, you know what, guess what? I'm entering. After you've seen all this happen. And what is about to happen is you enter, and guess what? You entered at the highest point of the day, losing out on the entire move because you refused to follow really what the price was doing. Okay, so each step of the way, if you don't enter because you think it's too high and it continues to move higher and so forth, by that time it's too late. You've missed out on the move. All right. I like, Jay, the 5-minute chart. Okay, I like the 5-minute chart. I like candlesticks. I don't trade Renko or range charts. I find them to be deceiving. All right, they look great in history and optimized and all that good stuff. But when you try to trade with a range bar, a range chart, Renko chart, and all that good stuff, it doesn't seem to produce the same results as it does in history. I like tick charts, Mike. Tick charts I like. Tick charts I have a scalping method that uses 250 tick time frame for a tick chart, scalping method, and I like the tick chart because I can visually see what price is doing each step of the way. All right. I don't follow volume charts as much because like I said, I don't like to have all of these charts up and running, volume, tick, minute. I have a tick chart for scalping, and I have a 5-minute chart, and that's what I follow. Well, bar charts aren't as good, Dave, as candlesticks. Bar charts, they show you the same information, but with a candlestick chart, you're able to visually see if it goes up, if it goes lower, with much more clarity than a bar chart. Okay. For scalping, I like the 250 tick, Bob. For scalping, three ticks, 2-3 ticks at a time. 250 ticks is sufficient. So, where does this leave us as traders? Right? We wait too long. We enter late. We miss trades. We get out late. and more because we refuse to follow what the price is doing. And by the way, this works the same exact way to exit a trade. When we refuse to get out of a trade when the price is going against us, the price is actually showing you something. I have what's called a prove it stop, where if it's not a catastrophic stop, but it's a prove it stop. If the price actually proves to me that it does not want to go in my direction, I'm exiting the trade. Okay, so each step of the way, whether it be an entry or an exit, follow what's happening. You don't have to have a huge stop. You don't have to have a stop that is so tight that it gets you out without leaving you, let the move continue, but you get out on a too tight of a stop. It's got to be a balance. And so having a prove it stop proves to you that price is not going in your direction and you should be exiting the trade. Let price always show you, not an indicator. Trust what the price is doing, not what you hope will happen. And now a perfect example of this is when we get into a trade and it goes against us. It goes against us and we have hope that it's going to turn around. And it goes further down and we still have hope it's going to turn around. And then an hour later we're saying, I still have hope it's going to turn around. I have news for you. If it didn't happen within half an hour, 45 minutes, an hour, 2 hours, what is there to hope that it's going to turn around? Nothing. The answer is nothing. We enter a trade because we want instant profit and instant gratification. And so 2 hours later, if you're still in a trade and you haven't taken that profit target, and I have a profit target based on the current market conditions, so it's a dynamic profit target, there's no sense to stay in that trade whatsoever. None whatsoever. All right? And which leads me to say, when you bring this all together and we follow price, we follow the current market conditions, and we follow a stop idea that says, prove to me, instead of I hope that you turn around, it's much different. It's much different thinking. I always have. Tim has a great question here. Do you place time limits on your trades, particularly scalping? I wouldn't say not particularly with scalping, but particularly with any trade that I take, I always have time limits. We get into a trade, Tim. We want to make our money. What's the use in holding on to a trade for an hour and a half? None. Right? Absolutely no. There's no reason. There's so many other trades that we could take and we're missing out. You get out, you look for the next opportunity, using the blueprint method or the ATO or whatever, but there's no sense to hold on to a trade longer than you have to. None whatsoever. How do the pros trade? I'm just talking about this, right, Tim? Good traders never stay in a trade that goes against them for an extended amount of time, right? It goes against you, it's proved to you that it's not going in your favor, out. That's it. Vladimir, I don't use any key numbers. I don't use any Fibonacci levels. I don't use any type of specific parameters. I don't use any of that. I really don't. I use a 5-minute time frame, Dan. I use a 5-minute time frame for all my trades. Now, interestingly enough, does anyone here know why a 5-minute time frame is so important when trading? Anybody have any idea why a 5-minute time frame is so important when trading? Now, I closed my Ninja Trader here, but I wanted to show you one of my charts. The reason why a 5-minute time frame is so important is because if you look at, and not Ninja Trader only, or not TradeStation Resignal or Metastock or whatever, it's not because of one specific platform. It's because of all the trading platforms have a defaulted time frame or defaulted time that traders can choose when looking at a chart. So as for an example, when you pull the drop down menu, what does it give you? It gives you a 1 minute, a 3 minute, 5 minute, 10 minute, 15 minute, 30 minute, and 60 minute, right? And you know, I shut down NinjaTrader because it has that thing that pops up that drives me crazy. Out of nowhere, it just goes bam, right? And so I shut down NinjaTrader. So if you think about, guys, the idea of using a 5-minute chart for all of your trades, think about what all traders in the world are using. They're using either a 5-minute, a 10-minute, a 15-minute, a 30-minute, a 60-minute, 15-minute if I missed that, maybe a 3-minute, or even a 1-minute. Those are all derivatives of a 5-minute chart. So if a move is going to happen based on a 30-minute chart, the trader that makes a move on a 30-minute chart, we are using a 5-minute chart and we're able to capitalize on it because we're there. A trader using a 60-minute time chart, or we're going to get a move if the market starts to take off at the close of that 60-minute candle. On a 5-minute chart, we're there to grab it. So it's really the idea of having or being there at each step of that derivative. 15-minute, a 5-minute will catch it. A 30-minute chart, a 5-minute will catch the move. A 60-minute will, and also a 3-minute. If a move starts off at 3 minutes, 3 minutes is a derivative of a 5-minute chart because you can divide 15, 30, and 60 divided by 3 into a 5-minute chart. So look at, and believe me, my methods of trading can work on MetaStock, MetaTrader, anything, because I'm looking at price. I'm not looking at anything specific. I'm looking at just the price. All right. I don't trade Forex exclusively. I like currency futures instead, SLA. Okay. So when you think of a 5-minute chart, think about how you're able to catch each move on any time frame, or more specifically, any major time frame. I don't know of any trader who trades a 17.5-minute chart, or an 8-minute chart, or a 13-minute chart, right? Dan says here, I've heard that less than 15 minutes is noise. No, Jay. A 15-minute, if it takes off, the move is over. And I want to be there with a 5-minute chart to catch it. All right, Dan, that's not necessarily true. With less than 15 minutes is noise. Jim says here, earlier showed an ES long entry today at 1327 or so. Did it get stopped out? No, it didn't. What initial stops do you set for the ES? Great question, Jim. I offer, and you know, believe me, I want to be dynamic when I trade. That means that I have 3 specific stops that I use. All right. I'm not going to go into too much detail. They're explained to you in the course, but all 3 stops are used on each trade. Catastrophic stop, a prove it stop, and a time-based stop. All 3 are used in conjunction with each and every trade. So a catastrophic stop, if you think about what happens, a news event comes out, there's some type of terroristic thing that happens in the world. It's not an announced news event. The market's going to go in one direction or another. I have to have a catastrophic stop there to protect my account. A time-based stop. A time-based stop is I'm giving it X number of minutes or bars in order for the trade to work out. That's a time-based stop. A prove-it stop is when the market proves to me that it does not want to go higher or lower, and therefore I'm out of the trade. The market just proved to me that it went in the direction I didn't want it to be, or it went back into a place that I should not have occurred. I'm out of the trade. I use 3 significant stops on each trade that I take, making sure that I'm covered from all angles. And Sly has here, does the rules work on Forex as well on a 5-minute chart? Yes, it does. And actually, the power price action method, about a third of it is all done in Forex, just so you know. A third of it is in E-mini, Russell, Dow, the indexes, currencies, and Forex. Professional traders never use the same tool as the average Joe to trade. Okay? You're never going to see a professional trader look at what you guys, with all the indicators that we have, they never look at the same stuff. Contrarian thinking. Don't follow the herd. It will lead you into slaughter. And I'm going to show you about trading the news in just a second here. But just know that if you start following what everybody else is doing, you're going to get the same results. You have to think a little bit contrarian, I have to say. You have to think contrarian a little bit in order to trade price the way it was intended to be traded. All right? All right, so chaotic markets. If you think about what happens during a high volatility chaotic market, how we trade, how we think, why do markets become chaotic? And I'm not sure if anyone here is in my I invited all my students that I have. I have a very successful mentorship program that takes you and teaches you everything that I have and that I own. But there's a specific, I teach this in the mentorship program. What is happening during a chaotic, volatile market? Well, think about what occurs during this kind of a movement. Can you really trade these crazy moves? I have to say no. And what about slippage? Is it worth trading during these times when the market just goes chaotic? Maybe a news event sets it off. The amount of slippage that you get on attempting to trade in this way is unbelievable. So trading during news events. And so before I go into trading news events, let me clarify why a chaotic market. Take, for example, a day that has a news event. A news event sets off some type of chaotic move, and we haven't had this in the E-mini, but if it occurs, the euro is going to go crazy, currencies are going to go up and down very strongly. But think about what's happening. Traders are trying to take advantage of the news event that just occurred, right? And so you as a trader, let's say Jay or Jim or Glenn here, Steve, you guys, you jump into the market and out of nowhere you get stopped out because you have a 4 or 5 point stop and the market just goes crazy and you get stopped out. And then you try again and you get stopped out again because the market has these wild swings. How many people here in the room can, or how many times do you think that Mike or Antonio or Sam or Dan are able to actually get stopped out during that day, during that chaotic move? How many times? Once, twice, 3 times? I have to say that typically after 2 or 3 times of getting stopped out in a chaotic market, typically you say, that's it, I can't handle it, right? I'm done. And so the day ends and you guys are down with a loss. 1 second, guys. Chad, have a good day.
You too.
All right.
Yeah,
all right, thank you. So what's really happening is that you get stopped out because you can't take it anymore. Now, what occurs the following day? What occurs the following day is that you as a trader, you want to make that back. You want to make the losses that you made back on that chaotic day. So what do you think happens? What happens is that day will continue, or that secondary day will continue with more on the same type of chaotic and volatile movement because everybody's doubling up on their positions, trying to make back the losses from the day before. So you're actually fueling the market. So think about a chaotic day that tags everybody out because the swings are just too much to handle. I want you guys to think about whether or not it's worth trading the following day, because the following day is going to be more of the same. You're going to have the same type of chaotic move because traders are going to try to get in there and either recover from losses they had the day before and it's going to fuel the market. So what I use as a good determiner to whether or not the market is highly volatile or not is the actual range of the bars. I look at the range of a 5-minute candle, and if that 5-minute candle has a range of more than 5 points, meaning high to low, there is no reason for me to look at this as a normal market. It is now a chaotic, volatile market. If you look back in history, any day that has 2 or more consecutive 5-minute bars that are 5 points or more, that's 20 ticks or more, on the E-mini S&P, you're going to see that it'll be a chaotic, volatile day. And now you know this, I want you to either not trade or trade very carefully and conservatively. Because as soon as you see 2 consecutive candles that are 5 points in range or more, think about what that means. Think about how many traders have a 1-point stop or 2-point stop and jumping in and getting stopped out and jumping in and getting stopped out consecutively, consistently, trying to do something with this. And so since this does not happen, it only happens, I'm going to say a good 14 days, 14 trading days out of the year, it happens. All right, this has been for the last 10 years maybe. If you go back, you're going to see about 14, 15 trading days out of the year it gets chaotic like this. When this occurs, you're going to have a number of days that this is going to continue. The magic number is 3. About 3, maybe 4 days, the actual market will slow itself down because traders start getting out of the market. They pull out because they can't take it anymore. You can't trade in that kind of condition. All right, so think about what it means to be volatile. 2 consecutive 5-minute bars, 5 points or more. Think it's chaotic and volatile. Stay out for the next 2 or 3 days because that's exactly what's going to happen. All right, so I'm just giving a little bit of preparedness for that. Let's take a look here at trading the news. When we follow the crowd when trading the news, okay, when you follow the crowd when trading the news, you are going to get clobbered, okay, because it's like a herd of people, like cows, following everybody when the news comes out. So the news events does not always concur with the market action. So if you have a positive news event or a negative news event, it doesn't always mean that the market's going to be going up, or it means it's going to go down based on that positive or negative news event. Okay? So trading the news here. First, never assume that positive news equals a bullish move. Never assume that a negative news event equals a bearish move. Always watch for the calm before the storm. Price will begin to trade very lightly just prior to a news event. So as everybody is anticipating that news report coming out, whether it be the PPI or the meeting or the minutes from the Fed, housing, unemployment, whatever the case may be, typically you're going to see a slowdown in trading volume prior to that occurring. And now what I like to do is I like to counter the initial move as the best option for trading a news event. So there's really 3 things that I count on that I can absolutely know for certain that occur during a news event. The first is I never assume that positive news equals bullish or negative news equals a bearish move. I never count on that being a fact. I also never count on, I also never try to trade right prior to a news event because I know that there's a slowdown right prior to it. It starts ranging back and forth and flip-flopping. I use the Bloomberg report, all right? I think somebody asked here a question. about the, where do I get my news event? I use the Bloomberg Financial Calendar. Okay. Joe, I would agree. Following the crowd is sometimes the same as following a trend, but it's a little bit different, Joe, when you're looking at a news event where it's instant, where the market comes out, there's a number, and then within 3 seconds the market just moved 10 points. Everybody's jumping in long. That's a definite following the crowd. Sometimes when you're in a trend, you don't know that you're in a trend until it's too late. The trend is over, Joe. It's a little bit different. So never jump in with a market order. Very important. Okay. Don't ever use market orders when trading the news. The slippage will be very, very large. Wait for price to come all the way back after the initial candle. Wait for the pullbacks if price takes off. And never act on impulse or reaction to the news. So let me show you. Here we have a GDP that came out, I think this was February 25th, 2011. And can anybody tell me the color of that bar that created that news event? What color is that, guys? Color of that bar. Joe? Vladimir? Steve? Piper? Is there a Piper 1 or is there just a Piper 2? Peter the Piper? What green? It's red, guys. It's red. So this candle here is red. This is the candle that actually created the news event. And so it's about, I don't know, it's 8 points maybe, 1307, 1304, 6 points, 5 points. But it's a candle that the news event came out, and at some point, how many people or how many traders do you think went short right over here following the crowd, right? So what I do is I don't do anything. I let this huge candle do its dance up and down and get everybody stopped out and, for lack of a better term, get killed here up and down, and I wait. And what I like to do instead is buy the market. If this candle is red, I'm going to look for a buying opportunity at the high of this candle, the candle that created the move. So since this candle was a bearish candle, a red candle, I keep my stuff as simple as possible. I'm looking to go long at as soon as this here gets penetrated and closes above, I'm long. So let me show you what happened on after the GDP, after everybody went short. That's what happened. So while everybody went short during this follow the crowd kind of mentality, following the herd to the downside, remember, at some point that bearish candle was completely red, engulfed in red. If you see a candle like that, wouldn't you want to jump in short too? But it's a news event, and a news event is so short-lived that at this point here, as soon as this candle closes, this green candle right here closes above this high, that's my ticket, that's my proof, that's my entry, exact entry at 1307.50 to go long. I don't use volume at all, Joe. I don't use any type of volume indicator to trade any of my methods. ATO, Atlas line, power price action, the trade scalper, or the price action scalping. I don't use any volume or anything to do with Fibonacci's, anything like that, guys. All right? In this particular Vladimir, I use the fact that this is a red candle to go long. And now if this candle was green, I would look only to go short. I would not look for an entry. I always do the opposite. I look for a price to break the high or low. If it's green, I look to go short. If it's red, I look to go long. All right? The power price action method is a 4 DVD complete set. It demonstrates exact instruction on multiple price action methods using either Forex, future, and currencies. I include a 50-page color training manual, which I want you guys to write in and practice the price action methods that I show you there. I offer 8 weeks of live training directly with me, John Paul. And I always want you to use exact entries and exact exits as a logic to trade all the time. And so since I started the power price action in early January, I've asked the students in the power price action room to tell me what they think, their thoughts, how it's working, and I've only had positive feedback from everyone. So there's 4 complete DVDs, there's 8 weeks of live training with me, and I actually offer a split payment method available. I trade from 9:30 when the market opens till about 1 o'clock. That's my trading time frame. All right, sounds good, guys. Thank you. All right, so if you have any questions about the power price action method, I'm just using price. I'm not using any of the indicators you guys use. I use a clean, nice clean chart. That's the way I've always traded. That's the way it was shown to me back in the 90s. And especially when it comes to the training that's offered, it's invaluable to spend 8 weeks learning how to trade price. Esther, the cost of the program, and actually I'm offering here a 10% coupon code for attending the webinar. The price is $9.95, or I can split that up in 2 payments. Esther. You got it, guys. You have to look at how the power price action works, Vladimir. How do I read the chart? Actually, Rose, I only the schedule is Wednesdays at 10 o'clock in the morning. Rosa, if you can only training on Wednesday, it's only Wednesday at 10 o'clock for 8 weeks that I do the training. All right. Very successful. Of course, Rosa. Joe, it is 1 day a week for 8 weeks. Yes, power price action. Wow, I spelled it wrong. Thank you for correcting me on that. Very good. Thank you. You're welcome, guys. Forex, currencies, that's right. Forex, currencies, futures, currencies, crude oil, gold. Doesn't matter the market. It's price action. Not with this, not with the power price action, Jerry. Sure, Joe. Send me an email. That's fine. Just let me know what you're interested in. Completely different, George, from the at the open method. Completely different. The actual winning percentage is 80% to 85% on the power price action methods. Doug, I use actually a stop based on the current market conditions. So recently, the current market conditions has been about 1.5, 1.75. So the stop would be anywhere from 1.25 to 1.75. on most E-mini trades. Now, if the market starts to become more volatile, we adapt that, and I show you how to do that, Doug. So I always use the stop, and I use the profit target as a measure of the market, how much it's moving up or down as far as volatility, Doug. But I don't use a volume indicator for that. You got it, Joe. Dave, if you have a question on the ATO, send me an email at support@DayTradeToWin or support@Power Price Action. Absolutely, George. At the open, if you look at the trades for the at the open method, there's been the last 6 trading sessions have all been winners. George. Mark, it is excellent for new beginners. So there's a lot of new traders, Mark, that I take you very slow in the DVD course, and which is important if you're a newbie trader. So yes, I would recommend it if you're a newbie. The at the open method, Rosa, is one of the earliest methods of trading that I started teaching traders back in 2004. Rosa. No, Theo. No, Theo. That was a special event, Theo. But send me an email, Theo. Maybe I can work with you, all right? Jay, I do not have a live trading room trial. I trade during the day, and I can't be doing trials and things like that, all right? You got it, Theo. Two weeks, Antonio. 2 weeks. Rosa, it's completely different. If you look on DayTradeToWin, you're going to have a description of all of the different methods that are there. Rosa, if you're interested in the at the open, please look at. It's completely different. The at the open is just 1 or maybe 2 trades a day at the maximum. The power price action method is completely different. Trades all day if the actual setups are there properly. You got it, Daniel. Good to. How you feeling, Daniel? You got it, Antonio. Delivery is 3 to 5 days. 3 to 4 days at the most, Mark. It's sent priority mail, and I include shipping as well. Yes, I do record training sessions. I do record the training sessions. All right, Bob. Have a good one. Very good, Daniel. Glad to hear that. Mike, it depends on if you're looking for scalping, if you're looking for a higher, less trades but more accurate. Scalping, you can scalp all day, and but I think the power price action method is something very new. There's nothing out there that teaches you how to trade this way, and there's no indicator. So it doesn't matter if you're using Ninja or Sierra or Metastock or MetaTrader. It doesn't matter. That's the beauty of it. You got it, Vladimir. I'm happy to hear that. Thank you. Scalping, it depends on which scalping method. If you're looking for a counter scalp method, or if you're looking for a scalping that goes with the trend, they're completely different. One just trades the E-mini, Mike. The other trades all markets as well. So send me, if you want the difference between the 2 scalping methods, shoot me an email, Mike, and I'll explain to you in more detail. All right? Theo, I don't recommend range bars. I think that if you get the power price action, you're going to be very happy looking at it through the eyes of a 5-minute. Not that it couldn't be traded in range bars, it can, or tick charts or volatility charts, but the 5-minute chart, you're going to see something very unique happening when trading the power price action, Theo. Well, Joe, I use the, during the trading sessions, we're using live data as it's happening to show you how to trade. It's live instruction, so it's not. You can use old data if you want, but for when I show you and during the training sessions, I do it live as it's happening, Joe. Oh, the paper trade, absolutely. If you want to look at history, all the trades are there. They're black and white. They're objective. Joe, thank you, Theo. You're welcome, Theo. You can go back in history and you can see all the trades that are taken. It's a very precise method of trading. You got it. 5 to 10 trades a day, Antonio. You can probably get at it on a daily basis. Oh, Vladimir, for a long time. Before the E-mini S&P was the E-mini S&P, Vladimir. Yes, Gordon has a great question. Could one program it into NinjaTrader for execution? The answer is yes, you can. It is that objective, Gordon. Yes, it is. 900 tick chart, Steve. No, Joe, not showing the ABC trade today. We'll do it next time. Jay, I have lots of videos. If you go to, I have over 300 videos, I think now, and counting, on me trading live. So you're going to see, if you go to DayTradeToWin, if you go to YouTube, the DayTradeToWin YouTube channel, I have, and there's also a Power Price Action channel that I just started on YouTube. You're going to see all the videos of the actual method in place. So if you wanted to see how the power price action trades, no indicators, there's plenty of videos out there describing how I do it. No, I am only using 5 minutes, Gordon. I'm only using 5 minutes, Gordon. 5-minute time frame. It's the only chart that I'm using for the power price action. All right. Theo, there is no indicators. It's objective, and there's no subjectivity. Absolutely. All right, guys. All right, I have to run. If you guys have any questions, please send me an email. I'll be happy to answer them. And I thank you all for coming. If you are going to get the power price action, don't forget to get 10% off using this Power 10 off coupon. All right, I want to give you guys 10% off. $100 is $100 off the price of the course, so it's to your benefit to use it. All right, you got it, guys. Have a good one. Yeah, you can call the 1-800 number. Okay, you got it. Very welcome, guys. Thank you. Jeff, bye bye now.